So good morning. Today is Saturday, the 18th of July, and we're going to go over the market data. This is all the standard stuff up here. I don't need to go over it. This is the current DUI map for Santa Clara and San Mateo County. You can see that Redwood City has gone to neutral. It's just been flipping back and forth, and you can see that the border area has gone to neutral. This area in the expensive areas has actually gone to hot, but it's just marginally hot. And I also want to point out that my definition for hot for them is anything below 75 days, and I think it's at 69 right now. So from, this market is slower, even though it's the same color than the rest of the Bay Area, but that's traditional. So is South County and Saratoga Las Gatas. But I just wanted to mention that right off the bat. Okay, here's just giving you a quick overview, and this is my typical 5-week data. It's looking at single-family homes in Santa Clara County. Basically, you're looking at the red line is the number of offers accepted. The blue line is the amount of inventory available. In a nutshell, when the red line is above the blue line, you're in a hot marketplace. So you can see prior to shelter in place, we were in a hot marketplace. Shelter in place happened. The reverse happened. Basically, the demand went to not to zero, but dropped dramatically. You went into a buyer's market, but very short-lived. We came back out, and once again, the red line is above the blue line. Notice the horizontal steps here. That indicates that based on 3 weeks, and then up here at 1 week, the sales volume is actually going to continue to go up. And that's going to be very interesting, because if that does happen, we don't have the inventory to support it. And again, that would cause prices to go up even more than they're going up now. Moving on to probably the single most important indicator of the marketplace, which is DUI, which is this blue line here. DUI is the rate of the speed of the marketplace. So the lower the number, the faster the marketplace is. And you can basically see prior to shelter in place, we were doing really good. We're in the red box outlined, which is a seller's marketplace. Shelter in place hit. We immediately calmed down or slowed down. Then we could start showing vacant houses, and then we could finally start showing occupied houses, and we've been improving ever since. These two lines down here are starting to become meaningful again. The fuchsia line is days on market median. You can see it went down to 0, and that's because the MLS allowed people to put a house on the market, not count it as being on the market for DOM purposes. And so once 50% of the homes were selling were listed during the shelter in place period, the DOM went to 0. You can see once it was lifted and they started counting, it jumped right back up, and now it's basically going at 10 days. 10 days is a very quick time. That basically says half the properties are selling within 10 days of going on the MLS. You can see it was actually 9 days prior to shelter in place, but I don't think people can tell the difference between 9 and 10 days. If you look at DUI, you're sitting here at 30 now. Prior to shelter in place, you were somewhere around 25. Again, there's a slight difference, but I don't think the typical consumer is going to feel it. Now we look at overbidding. This says, what are the buyers doing? How much pressure are the buyers sensing? And there's two different graphs here, which is why I extended the boxes out here. The first one is what I call the frequency of overbidding. How often are buyers overbidding? And you can see that going into the end of the year, they were basically 40% of the time buyers were overbidding. Right after the first of the year, that number goes way up prior to shelter in place. And this has a lag time because you need close of escrows to get sale price. And so there's a delay of about 30 days. But basically, you can see the trend went up. Shelter in place was announced back here on the 17th. Make it March 17th with the 30-day delay. And then boom, it started coming back down to the pre-holiday price range of 40%. But now you can see it's coming up again slowly. The other one that's on here related to overbidding is the magnitude of overbidding. And this is how much do buyers feel that they have to overbid to get the property. And you can see you were up here around 106, 107, 108%. Now we're basically right at 101%, rough numbers. So again, it cooled off, then it's been slowly increasing. And again, this is single family Santa Clara County, only 4 or 5 weeks. This again is priced to show that there's no real price. The upper end has actually been going up. The median's gone up a little bit, and the low end's also gone up a little bit, but clearly the top 10% has gone up the most. Now we're shifting over to the macro stuff. So this is where we're starting to look at just 1 week of worth of data. But by macro, I'm looking at single family homes, condos, and townhouses in both Santa Clara and San Mateo County. So it's just trying to say, what's the overall market doing, even though there's not a product that exists like that, which is why the first stuff was what, a particular product was actually doing. And again, we're starting now with the overbidding. Just in the past week, you can see that on the frequency, almost 50% of the buyers had to overpay. Now it's going to be higher number on the single family homes and a lower number in the condo townhouses. It's also going to change based on range. And then you can also see up here that the magnitude of overbidding is about 101%. So roughly the same order of magnitude, and that's why I pulled out Santa Clara County single family homes, is it's the single biggest marketplace and it sort of drives the local area. And this basically says they're in agreement. This graph is confusing for some people. It's different than most people do. Each line represents a given set of data, and it's the overbid distribution. So how much was a buyer overbidding in that period of time for the different homes? So this one line up here that stands out is the best month ever, which was April of 2018. And so in April of 2018, what it says was 25% of the sellers, the buyers, were giving the seller 20% or more above their asking price, which is pretty outrageous when you think about it, because normally on a big ticket item, you go down. So now what we want to do is compare, and there's a huge seasonal cycle. So that's April of 2018. The best July ever was July of 2019, and that's this red line down here. Now we do the reverse on the cold side. The coldest month ever, or the worst month ever, was December of 2001. And then the worst July ever was a little bit better, and that was July of 2001. It's interesting, 9/11 happened in September. There is no way closings in July of 2001 could have been impacted by the 9/11. And so this clearly shows that we were in a real estate recession before 9/11 happened. Most people blame it on 9/11, but we were well into it well before 9/11, because the worst July ever was 2011, 2 months before 9/11 happened. Anyway, the bulk of these data, as you can see up here, are the recent stuff, and the recent stuff is all weekly data. So the bright red one, which you can see here, is the current data, which is as of July 11th, and that's the start date. So it started last Saturday on July 11th. It ended last night at midnight at 11:59 on the 17th of July for a full week of data. And then what you see is the solid lines are the most recent 8 weeks. And if you look at it, you can see that the trend is all basically down this way. And I think these lines up here that look solid are actually the dashed lines, and that would make perfect sense, because my impression of what the market has done is like back on February the 1st, which is the first data set, which I believe is this line right here. The market then cooled down until about the end of May, and then it reversed direction and improved up. Here is the same data, but now this we should be able to see, because this is just looking at 12 weeks instead of trying to cram in 24 weeks. And so here we should be able to pull it up. So I'll spend a little time on here. Here's April 25th, the green line. So here's April 25th, and then the dotted lines are the oldest ones, and you can see the pattern was down. Now you can see dashed lines, and they've come up, and then you migrated into solid lines, and they've continued to come up. And that is what the data has done. So what this is basically saying is the market, once shelter in place happened, the market got worse. Once we got the ability to show vacant houses and show occupied houses, and we had 30 days to close those escrows, the market has been improving. And that's nice to see. Now we're looking at individual components for 1 week. So this is days of unsold inventory. The actual data is the blue line. So the lower the number, the hotter the marketplace is. The golden line is sort of the gold standard, and the gold standard was defined as the median for the previous 5 years, not including the current year. So that'd be 19, 18, 17, 16, and 15, which were all good real estate years. The median of those 5 data points is this gold standard. And you can see that the blue is right on top of the gold, and that puts the percentage right at the horizontal red 100%. So we're basically right where you'd expect the market to be as far as the speed of the marketplace is. So I had a conversation with yesterday with an agent that was telling me the market's hotter now than it's ever been. not true. It's as hot as it has been for the last 5 years. It's exactly where I'd expect it to be without shelter in place or COVID-19. So that's pretty phenomenal when you think about it. Now we're moving on to total active inventory that has no accepted offer on it. Same concept. The blue line is the data point. It's slightly above the gold line. That puts the red dot data slightly above the red line. You can see the red line has been bouncing around 100%. We're basically normal. You can't get an exact repeat, because take something like July 4th that has a major impact on the real estate market. Some years it's going to be in week 27. Some weeks it's going to be in years it's going to be in week 26. It just depends on how the calendar falls and how I define it. And I define it, I take the first Saturday of the year and then go 7 days after that. That is week 1. So I'm missing the first couple days in some years, and then it's going to be somewhere like the 4th of January to the 10th of January is week number 1. And that's how you get each week. And right now we're in week 28. Week 29 is 0 because we don't have the data yet for it. But the 5-year historical, we have the data, so it's plotted out. Moving on to simply the number of new listings last week. And you can see the data is below the gold, so the percentage is below. But the week before, we were basically right on top of it. And that's sort of interesting. And then the week before that, we were way above. And this is because this is the week that July the 4th normally brings down the number of new listings coming on the market. And you can see it brought it down this year, but not as much as it normally does. So some of the sellers that would be coming on now, in fact, came on 2 weeks ago. Bottom line is this is fluctuating right at 100% also. So we're getting the same number of sellers coming on the market as we would expect without shelter in place or COVID-19. Now we're looking at the number of offers that accepted, what's on the demand side. And it's interesting, the demand is actually above the 5-year median in the last 3 or 4 weeks. That makes up for some of this deficit back here, but by no means all of it. There were some people who were speculating, would we have a crazy summer, a crazy fall making up for this lost effort? I maintain a lot of real estate is optional, and I think it's transactions that are lost forever. But the good news is the market is doing well. The number of volume of transactions is there. Buyers and sellers are functioning normally. Now we look at the number of closings. This is actually somewhat of a puzzlement to me. It's basically saying that the number of closings is below where you'd expect it to be. And we're now way past the time where I would expect it to recover. And then it occurred to me what's happening, and it happened to me in my own business. The number of TFTs, transactions that fall through, is probably up. And buyers are just a little more nervous. So if a seller makes material misrepresentations, instead of saying, hey, it's going to cost me an extra $20,000 to fix something that I thought was done, but, it's still the best buy on the property. Instead of doing that and continuing with the sale, the buyers are now saying, I'm not going to deal with this seller. They're misrepresenting the facts. I'm going to get on with life. I'm going to find another seller. I feel comfortable even if I have to pay a little bit more for another house. So I think the number of transactions that are failing are higher, and that would explain why the number of closings is below. And this is somewhat important because this is what our industry lives on. We don't live on offers and inventory. It takes a closed transaction to get a paycheck, to get termite companies paid, to get title companies paid, and the whole economy doesn't really transpire for the most part until the escrow actually closes. There's going to be no loan, for example. And you can see we're down here pretty significantly, somewhere around 80% of normal. So we're still losing 20% of the transactions, even though we've had the normal number of offers accepted. Moving on to expired listings, the overall number is down here on the blue line, and you read that over on the left, so the number is somewhere around 18. So it's a very small number. It is above the gold line. And you can see for the most part, it's been above, because the red line, the percentage line is above the red 100% line. So we've been having more expired listings, which doesn't necessarily make a lot of sense at first blush. But once you realize that all the withdrawn listings from when shelter in place was announced are now expiring, and those now count as new expired listings, even though we counted them as a withdrawn list 3 months ago, that explains why the data is above 100% and why the blue line is consistently above the gold line. Again, nothing I would be concerned about. Looking at the number of cancellations, and that was expired. Here we're slightly below, and that's exactly what I'd expect. I'd expect it to be slightly, right at the normal line, but we got rid of all the people that were going to cancel back at shelter in place. So there's fewer of them. Demand is high, so we're having a little bit less cancellations than the 5-year normal. And again, you're somewhere up here, I would say maybe averaging around 90–95%. So little fluctuation when you're looking at data from week to week, because it fluctuates with the mix of property and everything else. But this lets you see what's happening in the last 7 days, so you know how to react for this weekend. This is the number of withdrawn listings. There is no history on this because once we're past the expiration date, the withdrawn listing drops off of the database and most of the times becomes an expired listing. This is just a percentage of all of them, and you can see they're all pretty closely grouped right here at 100%. The one exception is the number of new expired listings. And again, that's because the withdrawn listings from shelter in place being announced are now getting expired. Now we're on to the heat map. This is based on overbidding. This is going to be single family homes only. I didn't want to do condos, combine them because there is no combined product out there. This is going back to June 20th. Depending on how you count it, it's 5 data points, which is how I count it. 4 weeks plus 1 day, I guess, to be technically correct. So, and this is on closings. So this is really what was happening somewhere around mid-May. And mid-May, we could show vacant houses and occupied houses, but there was still a lot of confusion on how to show occupied houses. And also sellers that were coming on the marketplace wanted to expose them. So this is basically the last week when we couldn't really show occupied homes. But if you look at it, there's no change. The only change is this tiny little Foster City Redwood Shores area up here, which will go from a red marketplace to a gray marketplace. And there it went. But notice we're now up to the 11th and now we're at the 18th. There's been no change. So the spread of what's happening in the offer side of the marketplace has not yet really reflected itself in the closed marketplace, which is a little surprising. I'd expect it to be a little spread out, but not that spread out. Now we're going to go on to days of unsold inventory. This becomes very important because this is sort of the closest we can get to today with reasonable benchmarks. You are still going back 5 weeks as you need a period of time at which to measure the rate of sales are happening. And that is a 5-week period of time. And this would have ended on June the 19th at 11:59, which is why I call it June the 20th. June 20th should be a Saturday. So the bulk of Santa Clara County was hot. The northern San Mateo County was hot. The borderline in San Mateo, southern San Mateo and northern Santa Clara County were neutral, and the affordable areas were neutral. But if you watch, as we step through this going forward, you can see on the 27th, 1 week later, almost the entire valley was hot. And then there's no change on the 4th, and a little cooling here in San Mateo County on the 11th. And then on the 18th, this area now changed back to hot, just barely. And Redwood City just changed barely from a seller's marketplace into a neutral marketplace. These things could change either way. So even though there's a fair amount of color difference these last 3 weeks in the San Mateo, Santa Clara County border area, that is really no significant change when you're looking at the data, which is one of the reasons I'm trying to think about doing a shading instead of a shifting from red to gray to blue. Now, this data, just to be clear, is 1 day old. I do this data on Friday just to give myself more time to get prepared for today because there isn't enough hours. And basically before it's 4 columns, as you can see. The first column is DUI, which is the most current data. This is where we were the last 5 weeks before shelter in place. When it's red, that means we were in a buyer's market, a seller's marketplace for that market. You can see, and for most of the areas, that's defined between 40 and below 40 for a seller's marketplace. But South County and Saratoga Las Gatos is below 75, which is why even though those numbers are above 40, they're still colored red. And the same concept with San Mateo County. The only area that's a seller's marketplace was the expensive areas in San Mateo County. Now we look at the current area, and you can see that we're strongly into a seller's marketplace. And then I looked at the raw numbers and saw if the numbers were improved. I said it favors the seller. If they were basically the same in 28.1 and 27.7, that's same. I used 1 or 2 data points, days, that would all be considered the same. Here you went from 28 to 23. That's considered an improvement, so that favors the seller. So you can see overall the market is now favoring the seller more so than before shelter in place based on DUI, which is the most important indicator in my opinion. Now we look at overbidding, the same concept. We're looking at the frequency of overbidding. This is how often. You can see we were fairly hot to a balanced marketplace going into shelter in place. We're pretty much the same. I would say we're probably slightly cooler. There's a few more white areas down here in San Mateo County and in condos, townhouses. The number of red areas is essentially the same. You got one blue area here in the expensive areas in San Mateo County. Now you look at magnitude of overbidding. This is how much, and basically the same as the frequency. And then finally you go to price, and these are white not because they're in a balanced marketplace, but because pricing doesn't indicate whether you're in a buyer's or seller's marketplace. And then the third column in each group of columns is whether it favored the seller, which would be an increased price, whether the price is the same, or whether it favored the buyers. And you can see the condo townhouse market, for the most part, as a generalization, is either the same or favoring the buyers a little bit. So only moderate high price. So this is like your Campbell, Santa Clara, Willow Glen, Santa Clara area in condos has gone from 867 down to 768. That's lost $100,000, which is pretty significant. And I'm not sure why that's the standout as going the one wrong direction. It may turn out to be there was just a lot of expensive homes prior to shelter in place. Now we're going to go into a group of 11 metrics. Each metric has 5 graphs. I will only discuss the graphs for one of them. Most of them I'll be discussing B, which is the county-wide. When we're talking about the number of transactions, I can do it under A, which is the overall. So here's days of unsold inventory. I'll talk about it here. You can see Santa Clara County, the red line has basically gone down. San Mateo County followed the same general trend. But notice in the last, it's basically since July 4th, San Mateo County is sort of trending up a little bit. This would tend to indicate something's happening. And my sense, and there's no way to know, and I try to stay away from doing this, I sense the reason for this is real estate that had a premium related to commuting, that commute premium is decreasing. And areas that had a deficit because of commute was inconvenient is actually doing better. So San Mateo is a more convenient area for a lot of people to commute to. Therefore, it was at a premium. People aren't willing to pay the premium now. They see potentially a permanent change in the commute patterns. Flip side, as you go down to South County, their market's absolutely on fire. I've never seen it on fire that much. And it's because commuting to there took a long time during commute hours, but now you can do it in 30, 45 minutes during commute time because of the new normal that we're into. So that's going to be interesting watching to see if this trend continues. Santa Clara County single family homes obviously is in the downward direction. Santa Clara County condo townhouses is basically flat. Yes, there was a little bump here, but that market tends to lag behind, and I'm not too worried about it. Just stepping through, so if someone wants a particular data. Oh, and the handout is posted for anyone that wants to get it using the standard URL. There's 108 slides, I think, today. Here I can talk about it because we're talking about the number of properties that are currently on the market for a buyer to buy without an accepted offer. So the bigger geographical areas are going to have the most listings, so it nicely separates. So you can see Santa Clara County up here, and it's leveling off, and that's very typical. We typically won't see a decrease until about July 19th. So basically any day now, we should start seeing this number to start rolling downhill a little bit more significantly. It's basically been at its summer plateau. San Mateo County is basically doing the same thing. Condos and townhouses are more stable, and you can see they're probably still in an upward trajectory for condos and townhouses. Each one of the different slides. Now we're looking at the number of offers accepted. Here the offers are continuing to go up. It looks like when you look at the 3-week data and the 1-week data for the county overall. It's going to go up. You can see some of the micro markets went up. You can see some of the micro markets went down. This is going to be interesting to see what happens because normally, and I don't think that's going to be the case this year, normally the busiest 5 weeks is the 5 weeks ending Friday before Memorial Day. I don't think that's going to happen because that's going to include a lot of shelter in place, so it's going to be delayed. But I think we're probably pretty darn close to the peak. You know, it doesn't look like we're there yet with this leading indicating data, 3-week and 1-week data indicating we're going to go up. But I think we're getting very close to the maximum number of offers accepted for the year. Going through the different areas. Now we'll talk about the number of closed transactions. And this is still climbing. It's really interesting that this 1-week data is down, and that sort of puzzles me, but that's where the data is. It's probably as simple as 1 week doesn't give you very much data, and it's probably just statistical fluctuation. You can see your 3-week data is still right in track. So I suspect it's the 1 week is just, for whatever reason, the last week didn't close a whole lot of transactions. It is in the middle of the month, and a lot of transactions close towards the end of the month, although that's becoming less significant with the low interest rates. Stepping through the different graphs. Now we're going to go to frequency, and as you can see here, it's all jumbled up and real hard to discuss, so we'll discuss it at the county level. And so this is the frequency of overbidding. Same concept, Santa Clara County. You can see that the 3-week data point is basically right in line with the 5-week. The 1 week is up. So that would say in the last 7 days, buyers have felt that they have had to overbid a little bit more often. Not dramatically, but we're talking 55% maybe instead of 52%. So, you know, a significant increase. Could be statistical fluctuation, could be the new trend. Stepping through the different areas. Now we're going to be looking at the magnitude of overbidding. This is a little bit more stable, but again, if you can see, all 3 of them are stepping up as I go from 5-week to 3-week to 1-week data. But again, this magnitude here at 101% plus or minus a little bit, well, everybody's over 101, so between 101 and 101.5% is still quite a bit lower than we were back here at shelter in place at 105%. And that is something that I have noticed after every slowdown in the real estate market. Buyers are more stingy with their money. So a seller has to price the house more accurately because a buyer's not as willing to overbid 25, 35, 45%, 70% over the asking price. They are still going there. There's one right now that's pending, closed at 141%. But for the most part, most people aren't paying more than 25%. And we saw the distribution curve earlier. And it's basically, they realize that real estate isn't as safe as people think it is at times. And they just don't want to overpay. Looking at the different micro market areas. Now we're looking at sold price. Basically, you know, a lot of people feared prices were going to go down. There's no, this is 10 percentile price, no indication of that. Prices for the condo townhouses are flat even on the 3-week data, even for Santa Clara County. But if you go up to Mateo County, the 3-week data is flat and the 1-week data is up. So you can see there's been a lot of playing around with the 1-week data. So part of me is wondering if instead of doing 2 sets of data, whether I should cut down some of my workload and just do 2 weeks, because I'm beginning to think, which is what I've always feared all along, is 1 week isn't enough. But basically prices are flat. This is the low end of the marketplace. You can see we're up from the beginning part of the year. Here's shelter in place. Sale price would be lagging because of the length of escrow by about 30 days. But we're basically at the same level as when shelter in place was announced. The different areas. And now we're on to 50 percentile price. And this is what most people track only. I like to sandwich it with the 10% being on the low end, median being in the middle, and 90% in the top end. You now know that 80% of the homes or condo townhouses are selling within a specific price range in a given different market area. Again, exactly the same pattern. We're basically at $1.4 million. We were at $1.4 million before shelter in place. You can see we dipped down a little bit, but it was short-lived. It was sellers that were nervous, that didn't know where the market was going, and some buyers that were aggressive on the pricing, and they appear to have gotten good values here. Now, granted, it wasn't much of a discount. It looks like it's maybe $40,000 on a $1.4 million transaction. But, you know, and this could also have been a shift in the market. It could have been cheaper homes selling, which pulls down your median. Stepping through. Now we're on to the 90 percentile. This is more volatile because you bring in a couple high-end homes, a lot of high-end homes, and the prices jump, and it can jump up quite a bit. So the fact that we've gone from $3 million sort of as the top end of homes in San Mateo County to $3.5 million, back down to 3, back up to 3.5, then up to 4, now back to about 375. That really doesn't concern me. I don't, you know, a lot of it's just the makeup of the house selling. The higher the price of the homes are, and if there's a cluster of them, it can make a big difference in the price. Santa Clara County is better behaved. You can see we were, you know, last year we were at 2.5 million, got up to 3 million for a very short lived period of time, came down to about 2.7 million. Then we're back up to just over 3 million. And then the 3-week data is a little bit high and the 1-week data is a little bit low. You can see the townhouse condo marketplace is a lot more stable, which is just historically what happens with the townhouse condos. Now we're looking at the duration of escrows. Nothing really excited here, but you can see before shelter in place, we were doing sub 30-day escrows routinely. This is the median number, so half were closing in less than this time frame, half more. You can see with shelter in place, we went up to 30. You can see San Mateo County was flopping with 29, and now it looks like it's hit 29 solidly. Santa Clara County is still at 30. This is clearly a bad data point. Now we're looking at median days on market. The big takeaway here is it went down to 0, and it only went down to 0 because the MLS was freezing and not counting days on the market. And you can see the step up, and basically you can see that all the areas have sort of reached their equilibrium again. So this gives you an idea what's going to be happening going forward. This is the actual data set for each area. This is single family homes. You can find what your biggest data choice is. DUI to me is the big one. And you can see South County sitting here at 22 days of unsold inventory. That is extremely fast for any area. It's extraordinarily fast for South County. Southern County is typically in the 75 to 150 day range for a balanced marketplace. So for this to be at 22, they haven't seen that kind of marketplace. Their prices is coming up fairly well. I think that that's going to continue to happen. It is interesting that despite this fast marketplace, down there, the overbidding still doesn't happen. Their typical seller isn't even getting 100% of their asking price. So I think that's a mindset of the agents that you negotiate price down, even though we're in the same county. They don't have the concept that we do here in Northern California, that that's a starting place and you negotiate the price up. You know, and you can see the bulk of the areas are going up. So your Saratoga, Las Gatos, and your expensive areas are down, and your Morgan Hill areas are down. Other than that, everybody's up. Most of them are 60, 70% overbidding. South County is still only at 40% of overbidding. But look, they have the fastest market, 22 days. I don't think, 23 days here in the affordable areas, East San Jose and stuff, is the closest. You can compare 102% and 70%, 69% of overbids. It just doesn't make sense. That's how different the micro markets are. They're just not used to overpaying down in South County. This is San Mateo County broken down, and then this is condo townhouse broken down. This is the data for the month of June, and I'm going to end it with there and open it up for questions. Next week will be here. The handout is available through this URL.
Can we go back to page 8?
Page 8? Sure. Yes. Okay, here's page 8.
Okay, the page 8, why there is a flat between...
Right here?
Yeah, around there. Yes, yes.
Because a lot of properties get exactly their asking price. This is the transactions where the seller got exactly what they're asking, and there's just a lot of people there. And so, you know, if someone's asking $1 million for their house, a lot of people are going to offer $1 million. If they're going to offer up, they could be $1,010,000 or $1,020,000. And that's why once you're over here, there's a complete distribution curve, same below, but for right at 100%, there's a lot of transactions. So basically for the red line, rough numbers, between 45% and 65% of the sellers, so 20% of the sellers gave the buyers, gave the seller exactly what they were asking.
Okay, okay, so that's the sold price.
This is the
In this
sold
area.
price.
Yeah.
I
Okay,
have
thanks.
I have a request to go back to the June data, so I'm doing that right now. There it is.
Okay.
And then just real quick, you can get the entire handout, the whole set in a PDF by using this URL. And it's pretty straightforward. It's tinyurl.com/RE for real estate, market grass plural, handout singular, and today's date being 2020-07-18. And I keep that for all of them. And we got way less than a minute. Does anyone else have a question?
Okay, thank you, Richard.
You're welcome.